My wife, she's smarter than me.
Okay.
She listened to my advice, which was just buy an index fund. Don't worry about what the market does. Don't worry about interest rates or who's the president or whatnot. Like, stocks will go up and down. She listened to me. She put money aside every month, and she's the only reason we have a net worth. But, you know, like, because I put in like 15,000. If I was to hold it till now, it'll be worth close to 700 grand.
But you said this is the future Amazon.
How's that doing now?
So I bought, I don't know, I think it was like per share was like $25 when I bought.
That sounds about right.
And I think it's what, like less than a penny right now?
That sounds about right too. My total loss with options and everything was close to $180,000 I lost. It's funny now. At the time, it wasn't fucking funny. Like, I started investing when I was, let's see, how old was I? That was 15. So 15 was when my first stock I bought was Sony.
Wow.
And later I bought some penny stocks because I was reading and stuff like that. And my first go-to was like Warren Buffett. Later over the years, I looked into it, kind of got off the bandwagon, and I went back on. Then I went to index funds and mutual funds, and then I was like, 7% a year. What's that? Where's that gonna get me? You know, sure. I want to be rich now, right? Just like you, I want to be rich now. I don't got time for 7% a year. Which, on a side note, if I had just invested, like I told my wife, she's smarter than me.
Okay.
She listened to my advice, which was just buy an index fund. Don't worry about what the market does. Don't worry about interest rates or who's the president or whatnot. Like, stocks will go up and down. She listened to me. She put money aside every month, and she's the only reason we have a net worth. But, you know, like, but if I had done the same thing I told my wife to do, we'd be almost a millionaire. Like, we'd be very fucking close to being a millionaire. Okay. And so
what were the mistakes you made?
Well, the first mistake was, so I should start, if I was to start chronologically, the first mistake I made was I was trying to pick stocks that I thought was going to be a big winner. So
right. Well, what got into stocks, or besides Sony, I guess?
Well, what got me into stock was Warren Buffett, because I was like, hey, he's someone I can admire. You know, he always speaks very plainly. Buy stocks that are cheap, sell them when it's high, buy things that you understand, and don't overpay for value. And so it makes sense.
So you research a lot when you're...
Yeah. So when I was younger, I would read about the companies. I know what I read, but I didn't fully understand, meaning that, sure, a company will say that, hey, I'm growing 10% every year in sales. But what it doesn't tell me is how is the competitors doing? What's the macro landscape? What's that business environment like for that general industry, right? And so I knew keywords and things like that, but the nuance wasn't there. The context wasn't there. And I didn't really know. I didn't know why Sony was trading high or trading low. I just thought, hey, Sony, they make PlayStations. They're coming out with another PlayStation. So is
this when you went into Sony was right when PlayStation was blowing up, or
they were around 2007. So this was before the financial crisis of 2007.
So this is after.
I would say PlayStation 3,
PS3 era. Yeah. So yeah, they've they're the leaders of the gaming industry around that time.
Right.
So.
And so I looked at the chart and I said, oh, the last time it was their all-time high was 2001. Well, I think they released PS2 around that time, so they must go back up again. What I didn't realize
didn't do nearly as good as PS2, but
well, the other reason too was 2001 was the .com era bubble.
Okay,
everything and anything with internet was going up.
Yeah,
I failed to recognize that. Obviously, I'm much older, and I don't know about wiser, but I'm much more knowledgeable now today than when I was 16.
Sure.
First mistake. The second mistake that I made was I bought Radio Shack. Now,
Radio Shack.
So I know this is an interesting one.
Not
Radio Shack was when I was in my late 20s. Radio Shack was on the verge of bankruptcy. No one went to. When was the last time you've been to Radio Shack?
I mean,
You've never been to Radio Shack. Just stop. Okay.
I've been to a Radio Shack, but I don't think I ever bought anything from Radio Shack.
Yeah, you've never been to. I'll tell you a story. I went into Radio Shack because I was like, oh, you know what? There's Radio Shack near my house.
Right. I mean, they're always hard to find too. They're always in strip malls or something, right? They're never like in a big department store or never like in a mall.
Of course, because they're all gone now.
Okay.
But I went there one day. It was like 11 o'clock. I was like, I'm looking around. I was like, hey, you know what? I need to get a gift. Let me buy this toy. I picked out a toy and I'm there to cash out. And the guy said, oh, it's the credit card system is taking a while because you're the first sell of the day. I'm like, bro, this does not bode well for my investment right now. You're not instilling confidence in me.
What time of the day was this?
It was like 11 o'clock in the afternoon. I was like, come on, man, don't tell me this shit. Like, I don't want to hear that.
They were always empty when I went in. So, I mean, when you have like Fry's or Best Buys around, why would you ever go to a Radio Shack?
Well, so that's a good segue. So my rationale was Radio Shack at the time was dying. This was when Radio Shack originally was a DIY store. Like, hey, if you're into computer, if you want to build your own electronics, where do you go? Radio Shack.
Or Fry's.
But
Fry's
now nobody builds their own stuff.
Yeah.
Everyone builds or everyone buys smartphones or prepackaged computers or whatnot. And so with Radio Shack, I knew that they weren't going to survive. Economically, I knew it wasn't there. But I knew that someone was going to make them an offer, meaning that a private company was going to step in and say, hey, I'm willing to buy your company because I think we can turn it around, like a private equity firm.
Okay.
And like the vultures that they are, they did come in. I was right on that. What I was wrong about was the terms and conditions. So what happened was initially I thought they would make an offer that would be above market. So let's say that we're trading at $1 a share. And maybe this company would say, hey, I'll pay you $2 a share and take you private.
Okay.
I was right on the first part. I was wrong on the second part. It was so bad to the shareholders that it plummeted after hours. And then I lost close to 25 grand.
How many shares did you have?
I forgot the quantity of shares, but I think I had a principal investment dollar wise of like 25 grand into
all in one night you lost that much.
Pretty much. I lost more. I'll tell you my full story. So that was my first one.
Wait, how old were you?
24, 25.
Okay.
But I was always good with savings. So all my money that I saved, it went into investment. I mean, it pretty much went to like someone else's pocket, really.
Right.
Because it wasn't my pocket, And so the other thing that I learned over the years too was I was actually invested in Tesla before Tesla blew up the way it did. So back in 2015 or 2016, 2014. I was invested in Tesla at 2014, around $13,000. Then the stock went up and up, and then I sold it because I told my wife at the time, I think Tesla is overvalued. I want to sell.
2014?
2014 or 2015.
Okay.
Looking back at it, if I was to hold that same number, because I put in like 15,000, if I was to hold it till now, it'll be worth close to 700 grand. And so
goddamn.
I'm very good at keeping my losers, but cutting my winners. I'm very good at this.
No,
I always tell
diamond hands. Huh?
No. It's I was not very YOLO on this, but I always tell my friends like just do the opposite, you'll be rich. So if anything, you should pay me for inversing my trades.
Right. Just go the opposite of what you say, right?
And pretty much, man. And so that happened. I made a lot of mistakes. And my famous...
Did you have any good
not really
investments that you made?
Not really. I really didn't. My only good investment was my wife. That's the only good one.
So the lesson is you're not going to go back to stock.
No. So okay. Oh man. So then I started doing options. So options was very on and off. So for the viewers who don't know, there's two. No, I shouldn't say two. The primary form of investing in the equity market is called the stock market.
Okay.
You buy shares of publicly traded companies, Apple, Google, Tesla, Snapchat, anything that's public, you can buy shares of it. It makes you a part owner of that company, a very small owner, but an owner nonetheless.
Yeah.
Options are what we call a derivative, meaning they derive their value from the shares. Options, without going too technical, depending on how the shares do, subject to other conditions, it can follow and mirror it, or it can do good or bad.
Mm-hmm.
So I started going into options very heavily since 2021 and onwards.
Oh, pretty recent then.
Yeah. I've done it before, but I really ramped it up in 2021.
But you gotta be pretty keen on how it works to be able to be doing options at this point, right? It's not something that you want to do without having a good knowledge of how it works, I'm assuming.
So 2 comments. The first comment is, yes, you're right. One should have a knowledgeable base of how things work.
So I have like zero knowledge of stock because like I've only invested in one thing, and when I tell you what I invested in, you'll
tell me what you wish.com, the Amazon knockoff, the one where you order a thing and you never get what you ordered.
My buddy said this is the future Amazon.
How's that doing now?
So I bought, I don't know, I think it was like per share was like $25 when I bought.
That sounds about right.
And I think it's like less than a penny right now.
That sounds about right too. So I mean, you're on the same track record as me, 99% loss. But options are one of those things where you should have a base of how things work.
Yeah.
And I don't know if anyone is ever going to care, but there are what we call the Greeks, right? There's the delta, the theta, the vega, all those different things that goes into figuring out the value of your option. Because options, what they really are is a contract. It really is what between the buyer and the seller. And it says, without going too heavy into it, it's just a contract that says, hey, I'm going to buy 100 shares of Tesla at this price, and I'm going to pay you a premium so that I have the right to do it. Mm-hmm. That's it. Most people will never exercise their option. Most people use it simply as a trading. They'll buy it for $1, and the next week, if it does really well, it might go up to $5.
Okay.
So the craziest return I ever done on an option was 13x. I put in $1,000. It rolled up to $13,000. But I had a lot more instances where I had $1,000 and it goes straight to fucking zero in a matter of minutes.
So that's the norm, right?
That was a norm for me. That's why
Is that the norm with option in general, or just the decisions that you made that just yielded to that kind of results? I'm assuming it's more
the
volatile.
norm for me.
Okay.
Meaning that I always had more losers than winners. But statistically, I think academias, they took a broad notice that most options, they expire worthless, meaning that they were traded for nothing. So really, options, unless you are really good at trading, most people should never delve into options. And options really blew up in 2020 and 2023. And because of the whole pandemic, people were bored. The Federal Reserve printed trillions of dollars. And so everything went up to the moon.
Right.
And so if you literally just had $1,000 and you traded options in Tesla, you would have had almost 25 to 100 grand worth. You would have made a lot of money just because everything was inflated, And so from 2021 to 2020, actually, let's just say my total loss with options and everything was close to $180,000 I lost.
Holy, okay.
Yeah, so that's why.
So my poker story is like,
that's why I say like, that's why I say like, you should put 30 grand, David. I think you should join me on my loss journey here. If I have 180, I think you can join me on this one a little bit.
$2,000 in a night. Like, you're like, this chump change over here.
Like when you're trading, like, because options, like you can really put 25 grand on a single option. There's what we call like daily or weekly or monthly.
But you have to have high confidence to be putting that kind of money.
Or just high delusion.
High delusion. So you're in the delusion camp.
It's
Where were you getting your confidence from, Peter?
Twitter.
So you follow people, right? So people will say this is the investment to be making. So would you actually research the company yourself, or were you more looking into trends like on social media?
That's actually a very good question. So there's three main camps in investing / trading. The first one is what we call fundamental analysis. That's when we look at the company. We would say, what's this company what's this company sales? What's their debt? Who are their key owners? Things like that, right? You're fundamentally looking at it. You're trying to look at it from a business point of view. If I was to buy this company, things like that.
Sure.
There's the second camp called technical analysis. What their stance is, all the publicly information is already baked into the price. Sales already baked in. Future sales already baked in. Everything that you could think of is already reflected in the price because there's so many buyers and sellers. Everyone has looked into that information that if Tesla is trading at 160, that is the most accurate price. Therefore, you can never gain an advantage over your competitors from fundamental analysis. Technical analysts will say, we simply study the price action, meaning the behavior between buyers and sellers. They'll say, without going too crazy, buyers seem to be on the momentum. Buyers are very strong. We want to ride the wave with the buyers and we want to be very bullish on it.
Yeah.
Vice versa. Sellers are very aggressive in selling. There doesn't seem to be any buyers in sight. We want to be selling. That's the technical analyst side.
Okay.
We can go more in depth, but it's really dry.
Okay.
The quantitative analyst is where we go into what the hedge fund called Renaissance Technologies do. They do algorithms. They mix fundamental and technical analysts. They look at the flow. They look at all sorts of different patterns.
So
they hire mathematicians. They hire all of our smart people to just trade pieces of paper. And so what I was doing was technical analyst. I was looking at a price and I would say, well, for example, this stock, they bounced off the $10 zone because that's their floor. Floor meaning that this is $10. It hit once, buyers came in, went up to 11, sellers sold, it hit the 10 again. There was support, it went up, it hit the 10 again. It never went below 10.
So 10, yeah.
So 10 was the floor because at $10, it implied buyers thought it was a good value. We're going to step in. So what I would do is I would buy it at 10, ride the wave to 11, 12, 13, and sell it. But of course, anytime I buy it, the opposite happens. I hit 10, then people are like, it's no longer a good value. It goes straight down to 9, 8, 7. But it comes back to it. I was never a good trader. I really tried for 3 years. I tried studying.
Was it because you didn't do it too long enough, or?
I think it's two things. I think one, it's behavioral based or maybe genetics too. You need to be wired into a certain way. You need to really have a certain type of personality that makes you want to get after it. Like, I think it's the same with poker. Some people just naturally are gifted at it.
Yeah.
Maybe because of their personality, how they perceive the world. Whatever drives them, it really focuses them into poker being their top sport. Same thing with trading. Whatever they had, I didn't have. But I tried for 3 years and just clearly blew all my savings.
I mean, you have to have more of a understanding of how not only the product, but how the world, I guess, will receive it, kind of thing. So you want to foresee, how this product will, grow, within the future. Not necessarily if it's good today, but the sustainability of it, kind of thing. So you want to predict, this early, invention, whether it's going to become the norm or, the driving.
So if I was into more purchasing a stock, then I would be on your camp with options, because the other thing with options is not only do you have to be right on the direction, meaning you have to be right on whether it goes up or down.
Yeah.
But you also need to be right on what we call the time, because you could be right on the up, But if it takes you 3 years to be up, but your option expires in 1 month, it's not going to be worth shit.
Yeah.
So you need to be right on the time, the direction, and the last factor is what we call the volatility. Volatility will affect your premium price. So let's say that you bought it when the volatility was at 100% and you pay $10 per option. But let's say that for whatever reason, the volatility drops down to 70%. Even though the direction is correct and even though the time was correct, because the volatility drop, your option might be worth $7 instead of 10. So you need to be right on 3 factors, plus a little bit more to make a killing off of options. Now, there are great traders who have made a lot of money. I was not one of them.
So do we only hear about the people that made money in stocks because we only hear the success stories, or is it that easy to make?
No, there's a survivorship bias.
Okay.
So just like poker, I think trading is no different. For every Warren Buffett, for every Bill Ackman, for every George Soros, there's thousands of wannabe traders, washed up losers
that lost all their bankroll.
Yeah. And this goes back to, and this touches on the subject of personal finance, which is there is a fine line. It's very thin line between gambling and investing. I don't know how to define it, but I know gambling when I see it, and I know investing when I see it, But I always told my wife that at least one thing I can be proud of myself is that I never, in all of my trading, I never took out a loan.
Okay.
I never took out a collateral, and I never went on margin.
So
I never borrowed money.
So you played with what you had.
Yeah.
You played within your means.
That was my one hard rule I never broke.
Sure. And that's a lot of rules that people can't abide by.
No, because I knew very well from history and just my personal experience that I've seen from others.
Yeah.
Once you go negative, just getting back to the start line, which is 0, is very fucking hard.
Yeah.
It's so hard. It's unbelievably
and it's
hard.
too, once you go into that negative, like that time, spent, if you're ever in the positive, then, all that time you spent to get to that positive, and then you dip under the negative, and it's not only the money you lost, but all the time that you lost as well.
Yep.
So you're trying to make up both, rather quickly to get back to, because time is, money. So
Yep. And when you are getting that desperate, people do desperate things, and you've probably seen this in your poker career. Yeah. You start playing hands you shouldn't play. You start doing trades you shouldn't do, and you start chasing after it, saying, you know what? I only need one good trade.
Right.
I only want to break even. And I've been there. I know that feeling. Whenever you start saying, I just want to break even, it's like, you lost, buddy.
Right.
You got to pack it up and go home because you fucked up.
Yeah.
Cut your losses.
Yeah.
Save whatever capital you have. Tomorrow is a new day.
Yeah. I mean, that's why I say poker is one long session. You don't want to look at it as, individual sessions. You just want to look at it as overall one thing. Even if you're losing right now, you have to keep playing the same way you do. If you're a winning player, you have to keep playing that same way. If you're a winning, stock trader, you gotta keep doing the same thing that you do that was making you a profitable person, not do anything that's outside of those bounds. So
I think actually we did this experience together. Our funnest experience was probably GameStop. GameStop in 2021 was wild because you literally had a fucking outdated retailer that people were pumping up on Twitter around the world.
So why did that happen? So what's the whole story behind? Because I know of it, I just never participated. I know you and I think somebody else from our office partaked in it. Did you make money off of it?
I made some money off of it. I didn't make a killing. So
what caused that inflation, I guess, in that stock?
So there was a subreddit called WallStreetBets.
Okay.
Very degenerate forum, but it was, before it blew up to what it was today, it was a very funny forum, like lots of memes, a lot of shit talking, a lot of shit posts. But essentially it was a group of degenerates who said, you know what? I don't have time for 7% a year. Let's just YOLO and go all in and ride or die.
Why GameStop though?
Someone, I believe his username was called Roaring Kitten or something. He made analysis on GameStop and he said, hey, I think that GameStop can be worth more than what it is today. Some people bought it, some people didn't. And, naturally, it was kind of a quiet stock. Nobody really cared. But it started making waves once Ryan Cohen got on board. Ryan Cohen was the founder of Chewy.com. It was the online...
The pet food?
Pet supply store. Yeah. So Ryan Cohen got on the board of directors. And my memory is a little fuzzy, but this is generally how I remember. Mm-hmm. Ryan Cohen got on board and people got excited. It's like, hey, man, this guy's going to do great things. He's going to make changes. I think this company is going to go up.
So GameStop was already dying at that point?
It was dying. It was at like $2 a share.
Okay.
They had this...
Because GameStop is the last surviving video game retailer out there today, right?
Correct.
I can't think of anything else. I mean, there used to be more.
I mean, you can argue Target and Walmart, but really...
Yeah, but they're just department stores.
But GameStop is the only dedicated in that particular subsector.
Right.
And so everyone got excited, but it wasn't like a big thing like what it is today. Then at some point... I don't know if it was an article or if it was a hedge fund. Somebody said, oh, GameStop is worth nothing. We're going to short it. I think...
What is shorting? Sorry.
Short. Okay. No worries. So when you buy a stock, you just own it. Shorting is the opposite. Shorting is, let's say that I want to short a company. Mm-hmm. I would go to that brokerage and I would say, hey, I want to short $10,000 worth of this company. And let's say that share is, to keep it simple, $100 a share.
Okay.
So what the company will do is they would actually loan you 10 shares. You would sell those 10 shares at $100 per share. So now you got $10,000 in your pocket. Mm-hmm. But you need to give the brokerage their 100 shares back at some point.
For the price that you bought it at? Or that
at any price.
That it was worth at that point or something? Or...
When you're shorting it, you want the price to be lower than what you liquidated for.
Because you want to make a profit, right?
Exactly. But the brokerage company will say, well, you can short on what we call margin, meaning you need to put up a certain amount. And if the price ever goes against you, you would either need to put up more collateral or we are going to call back and say, we want our entire shares back. Because they're essentially loaning something. Mm-hmm. And if they feel like you are at a financial risk, they're just going to get it clawed back from you. And you're on the hook for the rest of the bill. Mm-hmm. So if that 100 shares or if that $100 went up to 120, then you owe them that 10,000 plus the additional 20 per share, which is $12,000.
So people that shorted GameStop didn't want the stock to go high.
Because they thought GameStop would go bankrupt. Right. So they were shorting it. They were betting it will go to zero.
Got it.
And, Wall Street Bets is like the milder version of 4chan. They were like, you know what? Fuck these people. We're going to buy more just to spite them. Even though they may not have believed in it, I'm going to buy it just to spite them.
They want to screw over all the short.
Yeah. So they bought it just to fuck with them.
Okay.
And they bought it up.
So a Reddit community did this.
A Reddit community did this. Later on, they lost some money. It came out. I believe it was called Melvin Capital. I might have to fact check myself. Uh-huh. Then sometime it was announced that they reshorted again. The same hedge fund reshorted. And this time people really got into it. It's like, clearly you did not learn your lesson the first time. So we're going to do it again the second time. So they doubled down, and this time a lot more people got invested. And at this point, this was riding full tide because you're on lockdown, you have nothing better to do, and all you have is the internet and stimulus money.
So this is all during 2020?
This was all during 2020, 2021. Okay. I think the peak was 2022.
So when people first started getting into the GameStop,
I would say 2021, 2022.
How much was it at the low point when people started getting in, and what was the high point of GameStop?
We would have to look at the stock chart, but
it was pretty significant, right? Like people
it was
buying
pretty
in
significant.
like $10 a share or even below, and then got into like a few hundred, right, per share.
Yeah. So from my recollection, it was around $2. Then from the first short to the second short, it went up to like $20. And then something happened. It just blew up. Like it gained worldwide traction because at this point, this was when people started paying attention and people started, you could see all these posts on Reddit. It was really popular. Like people were saying that, oh, this is fighting back against the system.
Sure.
This was people fighting back against the banks.
Right.
This became a political message more than just, haha, fuck you.
I mean, that's where Diamond Hands came from, right?
It did. Because they're saying like, we don't care what you do because
we're not selling. Because they didn't buy for that much to begin with.
Yeah, because these were just a group of individuals who literally put $300 or $400.
Yeah.
They're like, what's $400 to me? You know? And so they literally rode it all the way up to $300, $400, $500 a share until, and this is a controversy. The controversy is that Robinhood, E-Trade, all the main brokers, they stopped trading. You could only sell it, but you couldn't buy it. And people were saying, why not? And they feared, or they were saying that it was a speculation of people colluding. They didn't want the squeeze to keep happening because it would bankrupt all the hedge funds because they would be margin called. They would owe a lot of money.
But that's not illegal per se, right? Like colluding in a sense, or? No,
it's not illegal because Reddit, you couldn't really come after against people on Reddit because, I mean, the government will do what the government will do.
Right.
But I don't think what we did was illegal because it was just people talking. It's not like they said, oh, we're going to buy this to drive up the price. It was just, I'm going to buy this because fuck the hedge funds.
Sure.
Or to send a message.
So can this happen again, I guess? Meme stocks?
In the end, yeah. So this was, GameStop is the OG meme stock. Okay. Then the second one's AMC. But AMC is kind of like no one cares about that anymore. But GameStop is the original meme stock.
Okay.
So, they went up, but now they're kind of like going back to its original. They're like $30 or $40 a share because
people finally sold.
People sold, people got jobs, people moved on from their lives. People stopped talking about GameStop.
People got bored, pandemic finished. So
yeah, pretty much. And so like we rode that wave and it was pretty fun. I mean, I wouldn't go as far as some of these people to say that there was a great conspiracy. I understand the talking points of what they were saying. I will, however, say that just like your poker story, it seemed very sus, but I wouldn't put it past them. I'm pretty sure that they did have some hand, that's why Ken Griffin from Citadel Capital, he even went in front of Senate congressional hearings to say, because there was so much chatter about this. I mean, it was really a nothing burger because it was just a political show, but that was a good time. Let's see. Tesla was a good time.
Tesla's still relatively high. I mean, it's still on the upward trajectory. Like
well,
Tesla
at the very
Apple,
peak of 2022, they're worth slightly over 1 trillion. Now they're worth like 525 billion.
Oh, wow.
So they lost like half of their market cap.
Was it because of the controversies that Elon was getting in, or
no? I think
it was just other competitors coming out versus Tesla.
I think it's two factors. One is the interest rates.
Okay.
Right. So we literally went from 0% to 5.25%. Federal Reserve says, oh, inflation is too high. We printed too much money. We got to raise interest rates to bring down the activity. Makes sense. You created a mess. You're solving the mess. The second thing too is now, it's making it more difficult because you have BYD from China who's competing, is a Chinese company that's competing on the Chinese front. You also have legacy automakers like GM, Ford, Volkswagen, who are producing their own EVs on America's front. And so you have a combination of different factors. I'm pretty sure Elon being Elon doesn't help, but I think that's not the primary reason. There's other reasons for it too. And so,
I mean, what, in your opinion, what is the best, I guess, stock to be invested in today? If you were to invest today.
So I will tell the viewers that the best thing to do is invest in an index fund, S&P 500. It invests in the broad five.
That's the safest.
I don't know. I wouldn't say it's the safest. I would say
but that's what the market.
That's what the market is.
Right.
Because what does S&P 500? It takes the 500 largest company in America, and it invests in all of them for you.
Is this what your 401k usually does too, or is that different?
With your 401k, you get to choose. You can choose bonds like depths. You could invest in the S&P 500. You could invest in mid cap, which is kind of like the S&P 500, but smaller. Like there's a threshold like, oh, it's only 1 billion or below. You could also invest primarily in emerging funds. You have all these different things. I normally recommend the S&P 500. You get to invest in all the big conglomerates, Apple, Google, Microsoft, Nvidia, Airbnb, you name it.
Yeah.
They have enough global exposure because what company out there does not have an international reach nowadays? Sure. And so I would recommend that for almost everybody. Now,
but you have to put a lot of money in to make a sizable profit?
No, because it's something that you should be investing in consistently over the years. And this goes anti Peter, right? Because when I was younger, I said,
risky for the biscuit.
What's 7% for me, right? I can't retire off 7%.
Yeah, you want instant
but clearly I lost 180. So where did that get me too?
Yeah,
so
I mean, in California, maybe not much, but any other state that you got a nice house that you buy with that.
Hey man, if I had 180,000 right now, even in California, I'll still take it.
Yeah, of course.
You know, but if you look at the math, if you took 100 grand and you did a 7% every year for the next, let's say 30 or 40 years, you'll be a multi-millionaire. Yeah. And so, but if you were to ask me like, okay, besides the S&P 500, like an individual stock, I would say my money would be on Tesla. Maybe Nvidia, but I like Tesla.
What makes Tesla, I guess, out of all the cars to be, is it because it's the biggest EV right now and the EV is the future? Or
I've always liked...
What trends do you look for in like, you know...
My stocks, biggest thing was always the innovation because Elon was very big on innovating. He was always saying that we need to make things better.
So it's not Tesla. It's whatever Elon is like.
I think now Tesla can run without Elon.
Yeah.
But I would still prefer Elon to be there. So if Elon was to die or if he was to be fired from CEO today, I would not be very pleased with it. I'm not directly invested in Tesla, but I would prefer that he be there because he's the one that brought Tesla to where it is today, because I knew of Tesla back in 2014, as I mentioned earlier. And a lot of things that he said was I would say is very true before all the Elon hate came out.
Yeah.
You know, he talked about we need to make good cars. He talked about production hell in 2017. This was when like Tesla was like, they were trying to make 3,000 vehicles a week just to stay even. And there was a story too where they had tents. So at the time, they only had one factory. It's called the Fremont factory in California. This was their only car manufacturing there. And they needed to make 3,000 cars a week and deliver it or they'll go bankrupt. And Elon even came out in subsequent interviews and said, we were so close to bankruptcy that we got lucky. And there were stories where there were tents outside the Fremont factory and people were building because they just it was all hands on deck. And even though you weren't hired for it, like even though you were an accountant or whatever, it didn't matter what your position was. You were building cars because they said
all hands
you can argue and said that, hey, I wasn't hired to do this. Well, guess what? If we don't make it, you won't have a job. So you won't have a job.
That's funny.
You're going to do this. And we're going to, it's a make or die.
Now. That's the company.
Yeah.
Just all.
It's a do or die. From 2017 to 2018, he made it through.
So Teslas in the beginning stages weren't that reliable or just people just didn't think that infrastructure was there. So it wasn't that popular of a thing to be investing in the beginning.
Investing in their car
or there was enough product is what you're saying? Because
the demand was always strong for Tesla. Okay. It was a production that was always the bottleneck because he can make a prototype, but it's scaling it in a way where it's not killing the piggy bank. And so he always talks about, we need to get up to scale where we're making money on the car and we need to have volume, because that's why he always talked about, at least in 2016, 2017, 3,000 cars a week, because that was the goal.
That was the demand at the time?
The demand was higher, but that was what he needed to be financially sustainable for Tesla.
Okay.
And so right now, I think Tesla does around 1.3, 1.4 million cars. So they literally had an exponential growth. But the reason why I'm so big on Tesla is, one, the innovation. Two, I think that they have always been investing for the future. So whatever the other car companies or other manufacturers say that they're going to do, Tesla puts, the money where their mouth is. They're the ones who say, you know what, we think that autonomous driving is going to be the future. Debatable, but they say that they think that.
I mean, that's what people want.
That's what they, right?
Like traffic and freeway is like the biggest put off from driving.
They've been constantly working on that.
Yeah.
The other thing too is they have their own battery production with partnership with Panasonic. They have their own not self-charging. They have their own supercharging network along the country. They thought about this on 10, 15 years down the road. And to me, they are in such a lead that I cannot think of any auto legacy makers that are going to catch up to them. Now, I'm not saying it's impossible. BYD is certainly catching up to them, but they're a Chinese company, and you never invest in Chinese companies. And so
TikTok.
Well, look how that's going, right? But to me, it's I would pick Tesla. I mean, I could literally I could talk about Tesla for quite some time. But
did you have Tesla stock?
Aside from the one I sold, yes.
Okay,
but now I don't. But back then, if I held it to now, it'd be like 700,000. So
tech is where you want to be investing in.
I think so. I think tech is always where I want to be.
What do you think the future of tech is? Is it? I mean,
AI.
I know we talked about AI in the past.
Yeah, I think AI is the way. NVIDIA has clearly shown AI is the way. Have you seen? So
NVIDIA has been exponentially going up as well.
Now the third largest company. So number one is Microsoft, slightly over 3 trillion. Number two is Apple, 2.6 trillion. NVIDIA is at 2.3 trillion.
Wow.
So NVIDIA literally went from 700 billion to 2.3 trillion in like the last year, just because they own 80% of the GPUs in the AI front.
So is this also because of the Bitcoin trend that happened, or?
I think Bitcoin died Bitcoin trend was a couple of years ago. Right now, what's really boosting NVIDIA is all the AI hype. So everybody wants to get it.
You can make money in AI as well too, right?
Yeah.
As long as you have the equipment.
So OpenAI, they released their latest one called Sora. It's like text to video generation.
Mm-hmm.
So what they've done for, prompts like, hey, can you make me a photo of a dog? Now they can do dog animation. And so people are generative AI is here. Like, where is the next step going to be?
Mm-hmm.
And so that made NVIDIA moon. Like literally, if you were an NVIDIA shareholder, you'll be very happy right now.
So why is it just NVIDIA though, and not other graphical chips out
AMD
there?
is up on the moon too.
Is it? Okay.
Yeah, AMD. There's another one called.
Those are the two big ones, or the AMD and
NVIDIA, AMD. So in the chip, or I should say in that sort of sector, NVIDIA and AMD, they design the chip. They personally don't make it. They have a contract with a company called Taiwan Semi Manufacturing, or TSMC. TSMC or TSM, they make the chips themselves. They are what we call the fab, like fabrication. Intel is an American company that does both. They produce and they design. Samsung designs, and I think they produce as well.
Mm-hmm.
Intel used to be number one. NVIDIA caught up to them. AMD was always behind NVIDIA. Then they beat Intel. So now the rank is NVIDIA, AMD, maybe Samsung somewhere. Then Intel is at the bottom.
Okay.
And then you have, this is why you never hear of Intel anymore, because Apple designed their own chip. They have their own A1 chip that they outsource, probably TSM who makes it. Samsung does the same thing. Google does the same thing. They still use part of chips from Intel, but they're going in-house design now.
So the chips are, the materials are the same, right? But
they use silicone, but the chips is like, I'm not too sure on the technical thing, but then there's like a software and a physical component to it.
Okay. So it's more than just the raw materials itself that makes a chip.
Correct. Yeah, there's a software component too. And so if you were, and this is why I say like, tech is always the way, because sure, you can look at real estate, you can look at fast food company, but at the end of the day, tech is what magnifies those gains. If we look at how much the world has changed, it wasn't because of real estate or fast food or logistics. It was because of technology.
Right.
Technology is what continues to like push the boundaries of where's the world going to be, better or worse, we'll find out. And I think technology is going to be where we want our money to be. That's how I see it, at least.
Makes sense. I mean, innovation's always in technology,
and so it's whenever I look at my going back to my own trading or investing career, I think when you were talking about poker, it kind of,
I mean, it's
I don't
similar.
miss trading.
Yeah.
It was fun, but I didn't like the headache that came with it.
Definitely, yeah. I also did not like knowing if today, whether I'm going to have dinner tonight, depending on how I'm going to play. So that sweat, that I didn't have to worry about, is definitely something I don't miss. I mean, I still miss the excitement playing poker or the thrill.
I get it. I like the excitement too, but I remember there were some nights where I would have a position because I would hold it overnight. And then I couldn't fall asleep because I would like check the feed, like, oh, did any news come out? Or I would look it up. And then I would be like, man. And then because the market, there's what we call the pre-market, but the market on Pacific time, it opens at 6:30. So I would be up around 6:30 or around that time just to see how the market is doing, just to see. And then, within 15 minutes, the worst feelings, let's say that that it goes down and then it goes back up, but then you sold it on a dip. So you you got toilet paper hands, just crumbles and you just fold it up and it goes back up and you're like, fuck. And then
why wasn't I more patient or
oh man, if I only had balls of steel, diamond hands.
Yeah.
And it's funny now. At the time, it wasn't fucking funny. It was clearly
stress inducing for sure.
It was stress. And
I mean, when I was working with you, and I know you were in stock, I can definitely tell the days that you're having good days and days that I shouldn't be talking to you.
It's there were some days fuck, I really shouldn't do that trade, or I shouldn't be in this position, but you got that itch, and you're no different than an addict.
Today's a day.
I don't miss it now. I mean,
sure. I mean, that stress is definitely not something you miss, I'm sure.
Yeah, the stress is not something I miss. And that's why when people say oh, you're going to Vegas, are you going to gamble? It's it don't hit the same.
Yeah. I mean, yeah.
It really doesn't hit the same.
Yeah.
But I promised my wife, I was look, I'm not going to so what I told myself in 2023 last year was, all right, I have this amount of money. This is my last amount.
Sure.
I'm not going to put in any more money. No more good money after bad money. This is it. Whatever happens, it happens. Because originally, like you, I wanted to get rich quick. I wanted to be you know what? I just want to trade myself up to 500,000 or 1 million, pay my taxes, and then use that money to buy a home and then just quit.
Yeah.
Not quit my job, but quit trading.
Sure.
It didn't happen.
Right.
And so that was my original intention, but then later became damn, I suck at this. I just want to break even.
Do you think you sucked at it, or I mean?
No, I think so, because if I was good, then the results would have spoken for themselves. That's how I judge myself.
But then going back to how we only hear about the success stories, it's not because the ones that weren't successful were not smart enough. It's just right place at the wrong time kind of thing.
That's true too. I mean, maybe I was unlucky, and maybe there could have been a lot of different factors, but maybe I'm harshly judging myself. But at the end of the day, if the results I was looking for was to make a profit, I did not get those profits.
Right.
To me, I just wasn't good enough.
Sure.
And so I told myself at the end of 2023, this was it. I had my run. The only thing is I never went into debt, but I'm done. I'm not looking back. And ever since then, I think it's been over 7 months now. I never once looked. Like, the only compromise I told myself and I told my wife was, we will only put 5% of our portfolio into a Tesla stock, but I will only buy Tesla when it goes to a certain price point.
And because you believe in the product too, right?
Yeah, because sure, people might hate Tesla, might hate Elon, but I love the car. Yeah. I think it's a great car. I personally like it.
And because they have such a head start, it's going to be one that should be.
But I'm biased. I acknowledge that. I'm very biased to Tesla. I like it. I like the company. I think they make great strides all the time. Call me a fanboy. But I told my wife, look, if you're okay with it, I want to put 5% of our portfolio into Tesla.
Yeah.
But if you're not okay with it, that's okay too. We'll only do index fund. And she said, no, that's fine. We can do 5% in Tesla. And
well, Tesla already has historically, has shown that, it can't be profitable unless something drastically does happen. Yeah. So
fun fact, Tesla is I think they have no debt. So out of all the automakers, they have no debt in their entire balance sheets.
Interesting.
Yeah. So they're really, Elon was saying that one of the reasons why he's very adamant about debt is because back in 2017 or 2018, he made a tweet that said funding secured at 420.69 or something. And he claimed that he was going to take Tesla private and that he had a buyer lined up. He couldn't substantiate his claims, and the SEC, Securities Exchange Commission, sued him under false pretense or something like that. So part of that condition was he needed to get his tweets approved by legal counsel before sending them out, and he couldn't do something else. He never got any of his tweets approved, by the way. So let's be clear on that one.
Elon doesn't look like he plays by the game.
He does not play by the rules. And he later came out in subsequent interviews saying the only reason he agreed to that was because JP Morgan was strong arming him into accepting it, because JP Morgan lended Tesla money and they didn't want
they wanted the money back.
Yeah, they didn't want bad image pretty much. And so Elon was kind of like, he doesn't bank with Chase. So fun fact for you. I think that's how the general story goes. I'm sure I missed some details, but I told her, let's just do index. Let's just do a 5% Tesla and just keep it simple. I mean, I didn't make it work for 4 or 5 years. I'm not going to make it work now because nothing about me has changed. My input didn't change. Right. So why should my output change?
Yeah. I mean, to me, stock, it's like you can make, the same decision, but it can go both ways. So the reason I say this is because my grandfather, he owned stock, but he put it all in one. He did it in video games, right? So back in the 80s, he chose one video game company to do it for. If he chose Nintendo, we'd be having a different story today. But he put everything in Sega at the time. But Sega at the time was, just as competitive as Nintendo. Yeah. But it lost in the long run to Nintendo kind of thing. So, I mean, it wasn't a bad decision he made. He just chose the wrong horse.
You're right.
He just chose the wrong horse during that time. So, I mean, it's all about luck.
Have you ever heard of the guy named Nassim Taleb?
Maybe.
He popularized a term called the black swan.
Okay.
And the black swan events is an event so rare that it shouldn't occur, but it does occur. And he also talks about something else called alternative histories, where in a different history, in a different timeline, we would have lost World War II, or Sega would have become the Nintendo, or Tesla would have become bankrupt. And so there are many times when the thought process was correct, but the outcome was not. And Warren Buffett often talks about that, where it's like, this is why you need what he calls a margin of safety, where I come to the conclusion that I think that this company is worth $70, but I realize I could be very wrong. So I don't want to buy it at $70. I want to buy it at $50
for that margin of error.
Exactly. Right. Because I really want to make sure that I'm not being a hamster.
Sure.
And so a lot of people, they understand that on a basic level. They'll say, oh, I need a new screen TV. They'll check. They'll go to Walmart. They'll go on Amazon. They'll say, well, what's the best price? What brand is the best? They'll do their research. But when it comes to stocks, like, oh, everyone talks about GameStop. Let's just buy GameStop. And no one ever stops to think about, like, what am I actually buying?
Why is this? Yeah. Why is this trending right now? Or what?
Exactly.
Yeah.
And so I have a lot of friends of the family, like older people, like, you know, like first gen immigration, like, you know, they finally have some money on the side and they want to invest their savings. Mm-hmm. And they say like, oh, you know, I have money that I put in 401k. What should I do with it? And I tell them, well, you should invest in an index fund.
Yeah.
And I explain to them the mechanics because I feel like it's very important that people know what they're buying. I'm pretty sure it went over their head, but at least I've done my part, you know. And I said, look, just don't worry about it. I promise you it will go up, but I also promise you it will go down.
Sure.
Whatever you do, just let it be.
Don't care about it.
Yeah, just forget about it. And
I mean,
so
it's the safest one to invest in. So you shouldn't really have to care too much about it.
Yeah. And you know, I should be careful with this saying too. It's not that it's the safest, it's just the average, sure. Right? So if the market goes down, hey, you're going down with it because you invested in the market.
Right. But the market shouldn't always be going down.
Right? It shouldn't always be going down under the conditions that America will always produce more. America will always be very productive and that the wealth will generate over time. Because what is the top 500 companies? It's the Apples, it's the Berkshire Hathaway, it's the Google, the Microsoft. If you really believe that all of these companies are going to be not producing as much, that they're going to go bankrupt, guess what? America has way bigger problems than your 401k. Right. Way. So I tell people like, look, if you believe that the apocalypse is coming, go buy guns and ammo, right. Because your silver and gold is not going to be worth much.
Yeah, it's going to be worthless at that time.
Yeah. And so I'm like, look, man, in that kind of situation, we got way bigger problems on our hand. I would not be worried about things like that. It's just paper at that point. You know, it's kindling for your fire. Sure. And so my biggest thing with people is know what you're buying, realize that there are certain nuances to it. You shouldn't just be gambling with your money. You shouldn't just be like, okay, I want to buy this because I think that historically, you know, stocks always went up, so I'm going to buy, so it's going to go up. You know, it's not like that. So,
I mean, yeah, it's complicated. I mean, I barely know anything about it, but I just know if you have money, you know, to make money, you need money. And then, you know, if you're not investing, then where else are you making money? So
I think there's a lot of similarities to poker players and investors because I think it's, you know, earlier I thought it was very interesting. You talked about the position of the poker player, the button, mm-hmm. right? Because you get to see the flow of information. And in a similar sense, as an investor, you get to see the flow of information.
Yeah.
This is why insider trading is very illegal because you literally see the first flow of information as an insider. If you work at a publicly traded company, you get to see how well you're doing before anybody else does. If you're the CEO or the CFO, you know all of that information firsthand. So you cannot trade on that information because it's illegal.
How much do you think insider trading does happen in the world of stocks?
It happens.
I know it happens, but is it as
common
as, you know, people think it is, or is it very rare occasions? Because I mean, politicians, right? That's like the ones that are notoriously known for insider trading. Like, how do politicians make that kind of money while just being in politics? You know, you're serving.
So the most popular one in recent time is Nancy Pelosi and her husband.
Correct.
I forgot what her husband's hedge fund is, but I think that I don't necessarily think that he has some insider information to these companies that allows him to make above average trades. What I do believe is that he has connections with people because of his wife, meaning that her husband can name drop Nancy Pelosi, get into meetings with executives, get into closed door meetings with high powered individuals, and then from there get information that is not illegal, but is, hey, other people don't know about this. So,
but then the politician, like if you have connections with, somebody in politics, they're making the rules that, other people have to dictate, but those rules can benefit you, or you get to make the rules.
No, that's true too. So I think politicians are smart enough to know not to be so brazen about it.
Yes.
I know there have been cases where they are, but I think on whole, most of them, they're very sly.
Yeah. The Pelosi's. So that's, going back to poker, calling with jack high, knowing that your opponent has a 10 high. That's what the Pelosi's were doing.
Well, it's very sus.
Right. And like, you can't prove that you did it, but the fact that they sold at this time or you bought at this time.
Well, because something stinks about it, And no, you're absolutely right. So if I had to put money, is there corruption? 100%. To what degree the corruption, I really can't guess.
Right. But because that happens, I mean, isn't the scale tipped a little bit and against the consumer versus, or the regular consumer versus like the people that have all these knowledge? Like you will never be playing on the even playing field.
You make a very good talking point on this one. So in trading, there's what we call, there's a term called institutional trading and retail traders. So retail traders are like you and me. Institutional players are BlackRock. They are Renaissance. They are the cream of the crop, right? The George Soros, the all the top players, right? These are the people who pay quants and analysts and traders like 300,000 plus bonuses to run their $1 billion funds, right? And so there's one guy that I was following on Twitter, and he believes this very strongly. He says that you cannot beat the whales. Whales meaning institutional traders. You cannot beat the whales. The whales have decided something, and the stock will go that way. Our job is simply to ride with the whales, not against the whales.
So when you see, politicians that seem to be making money in stocks follow what they're doing,
so what he was saying was that's one aspect, but what he was simply saying was retail traders cannot move the market individually. In rare cases, it can, but on average, it cannot do that. So, but institutions can. Institutions like JP Morgan, BlackRock, they can load up a 50 million is not even that big for these players. Sure. That's a drop in the bucket. They can load up $100 million position on Nvidia when it was at $600, and then they could start pumping out press releases. They could start hyping it up. They can start putting in massive flows to pump up the stock to where it is. Right. And what it is they do their own, what Wall Street Bets did with GameStop. They can squeeze the market. We've seen, if you look at the chart for Nvidia, it squeezed from 600, 700, 800, 900, literally like this. Exponential. It wasn't like natural growth. It was just literally straight to the moon.
You can see some kind of manipulation went into it, kind of thing.
You can argue manipulation. You could argue natural price discovery, whatever you want to call it. You can tell that there was institution with a lot of buying power, and there's always interesting flow analysis where someone will look at all the trades coming in, and someone will say like, hey, I see this abnormal trade. Like someone bought call options for, let's just say 700 for Nvidia, and Nvidia is trading at 300 or 400. And 1 or 2 months later, Nvidia goes up to 500 or 600. And that person who put like, let's say $2 million position, now they're worth $20 million position. So if you follow the money, was that a hedge against their existing position in their portfolio? Or did they know something that we didn't know? Take it for what it is.
Generally, the latter is what I'll go with.
I believe that somebody always has a paid insider. Someone will always have, because if you're an analyst and you're making 300,000 in base salary, but most of your money comes in bonuses, 1 million, 1.5, I guarantee you'll slip 200 grand to someone like, hey, you know what? If you give me this information, I'll give you 25 grand. And if it pays off, I'll give you an extra 100.
I mean, however way you can make a profit, as long as you're not getting caught. But
yeah. And it's not even, there's so many like finance like scandals out there. So like this was years ago, but the traders in London, and I think it was, I don't want to say it was Chase, but there were some traders in London who was fixing the interest rates. They call it the LIBOR, London Interrate. It's pretty much like this, like interest rates that they use in like UK that all the other interest rates are pegs to, right? So they're pretty much like, there was a big scandal because they were manipulating the rates because traders colluded. It's like, hey, trader A or John, you know what? I'm going to buy or sell this at this rate. Like, come in with me. Or so like, if it ever goes dip, I want you to cover for me and keep pushing it up.
Yeah.
You know? And so you'll have traders who will do certain things where they'll collude with each other. Or the other thing too was when, I believe it was WhatsApp, or was it Slack? There was some messaging app, and pretty much Goldman Sachs, you know, they had like a huge audit scandal because they were like, these people, these trader, they were like just openly talking on their messaging like, hey, they're essentially colluding with each other to bid up prices, you know, because they're traders.
Yeah.
They don't want their positions to get fucked.
Right.
And so a lot of them were like, you guys should not be doing it, but they were still doing it. And so traders are going to do what traders are meant to do.
Yeah, when you have power, you don't think, you know, there's no consequences for whatever you're doing.
Because you don't tell traders like, oh, we want you to be morally ethical and responsible in how you make your money. No, Goldman Sachs will tell them, we want you get a bonus on what you make. Fuck it.
Right. Because I mean, Goldman Sachs, they won't be the fall guy, you know, everybody else.
Of course not.
So
they're going to pin it on the small guy. They're going to pin it on the traders. What do they always say? It was a rogue trader. They went against the company policies. Right. It wasn't Goldman Sachs.
Scapegoat,
of course,
whatever to throw everything at. So,
and it's the same thing with, you know, the classic insider trader scandal was Martha Stewart. So Martha Stewart,
how long did she go to jail for?
10 years.
10 years. Okay.
So she gave her friend a hookup, but she told her friend something about the company, and they were trying to convict her for it. But you know, that's not why she went to jail for. She went to jail for lying for perjury. And because they couldn't convict her on the original claim, they gave her the harshest sentence on the perjury claim to make up for it.
Right.
Because they're like, you sly bitch. Okay.
Plus, you know, making an example, I guess. So.
No, pretty much. This was like the whole like Enron scandal time. This was when like 2003 or 2004. So, I mean, there's like I get really into like the finance scandals, and you know, to me, I always say like the finance corruption it's there. It's just not so. You know, when you think of corruption, you think of like a city councilman stealing from the taxpayers, right?
Sure.
You don't really think about like someone like rigging the interest rates because it's such a obscure thing. Like, oh, how does that even affect us?
Yeah.
But
I mean, you don't think of like who's profiting off of that kind of thing. But
yeah, because it's so unnatural to think about it. But someone is.
But that's the game that we just don't know about. You know?
Exactly. And so whenever I think about finance, I really feel that, yeah, you're right. The retail will never have an advantage against institutional trader if you believe in that theory, and that institutional traders will always set the momentum. If you truly believe that, then this is why I say don't worry about trading and just go index, because the index will just track the broad market. And if the market goes up, it goes up. But if it goes down, keep buying it, because eventually if America produces, it'll go back up.
You just don't have that hitting the lottery kind of aspect to it, because you'll never have that kind of volatility.
Yeah, but this is why it goes back to poker, where not everybody can be, what's that guy's name? Daniel. Not everyone can be Daniel.
Sure.
Not everyone can be Phil. Everyone wants to be.
Right.
But
I mean, you also play poker for the big ones, right? You're not playing poker for the gradual wins or, the steady increase. Same thing with the stock. I'm sure you play it for that.
Of course, everyone wants to have a home run under their belt.
Right.
But then.
So people, I'm assuming that's why people never go into the safe or the S&P 500, just because, you'll never have that home run.
Because everyone thinks that they can do better. And I made that mistake too. Everyone thinks that, you know what, I can time the market. Right. I can do better than the average because I am so smart. But we're all, I was clearly retarded. And so I was a hamster spinning my wheels. And so it was, I don't want to say that it was traumatic for me. It wasn't dramatic like that. But it was definitely like.
It was a life lesson.
It was a life lesson, but because my whole identity, or part of my identity was, I'm a stocks guy, I'm a finance guy, this is who I am. But instead of me being honest, be like, you know what? You just suck at this. you should take a step back, buddy, and just focus on something else and put your energy into, and now that I look back at it, it's like, why do we do anything that we like? I invest because I want to have retirement. I want to have enough money to be financially secure for the future, for my health, for my family. If you want to play poker for that same reason, or if you want to play poker because it's fun, that's great. But
yeah, I mean, for me, it was just not having a traditional 9 to 5. That's what pulled me towards poker. And I'm sure that's what pulled people who are, day trading and stuff like that. It's not your traditional 9 to 5.
You're right.
Yeah. You're your own boss at that point, making your own money. You're not being in that middleman. So I think that's what attracts, people like me and you to those kind of like.
I mean, it did, but it's also, I mean, what's that saying that, the wise learn from the mistakes of others, or something like that.
Okay.
But oftentimes, like, most people will only learn from their own mistakes because it's something that everyone needs to experience.
Right. And as you said, you always think you're smarter than the fool that made the mistake. So you don't put yourself in those shoes.
But if everyone thinks that way, then you're just the average. Sure. And there's what's his name? I'm drawing a blank on this guy, but he talks about, how should I say this? Second level thinking.
Mm-hmm.
And the principle of second level thinking is everyone thinks a certain way. Why do you think that your way will be any different? So first level thinking would be, everyone is at this restaurant. This restaurant must be doing so well with their sales. We should buy this restaurant. The second level thinking is everyone thinks this restaurant is doing so well. This restaurant's value is already priced at a premium. We should be shorting this restaurant because it's going to come back down to reality.
Because you already see the trend coming. You already foresee what will happen a year from now. So you want to get ahead of that curve.
Yeah. And he was saying it's easy to be the first level thinker because that's the most natural way.
Right.
Second level thinking is the unnatural way. It's where you step back and see the whole picture, the whole mechanics of it. And so very few people, I think that you don't need to be a high IQ person. You don't need to have crazy mathematical skills to be a trader or investor. I do think that what you need to have is a general sense of business, not in any academic word, just how the world works. You also need a general understanding of value and price. Price is what you pay, value is what you get. You should never pay more than your value is. But it's hard. Everything that's common sense is uncommon in
It's common sense until you're actually practicing it, and then everything goes out the window. Like everything that you think is common sense just doesn't work unless
because you're not thinking about that. You're thinking about, man, I can't wait to make a killing on this.
You're just looking at that graph, looking for the upticks.
Because when you make that purchase, just like when you're in a poker hand, you think I'm the one that's in the right, because why would I be in this if I don't think I'm right?
Yeah.
And so for you to back out and be like, you know what, I think I'm wrong, I should sell, or I should, he re-raised me, or he called my bluff, I should fold. Instead of doing that, you double down.
Sure.
And then you end up be like, God damn it, I should have just sold when I had the chance.
Right. Well, I mean, yeah. So like when you say second level thinking, same thing in poker, right? Like you have your image that you're showcasing, and then you make the other person think of your image that way. But because you know that your image is already that way, you do the opposite of what your image is because you already showcased it. So you have to think above what other people perceive you as. I'm sure it's the same thing as stock. You know, you.
Oh, I see.
Yeah.
Like
so
sort of like
thinking.
your reputation at the table.
Correct. So you sell that reputation, then you put yourself into their shoes of how they're thinking of what your reputation is, and then play against that thought process that you play. I mean, it's a lot of, you know, second, third level, fourth level thinking, but it's the same kind of concept.
Yeah. And this is why I, you know, looking back at the big picture, this is why it goes back to my earlier statement that the difference between investing and gambling is a very fine line, because the way I always think of it is everything is in hindsight, because if something that you did turned out to be really great, it was a great investment
you ever made. Yeah.
But if something turned out to be really stupid, what a stupid gamble.
But it could be the same decision too.
Here's a funny story to end this podcast on. So I believe it was FedEx. When FedEx was first starting out, the CEO / co-founder was down to his last $10,000 or $20,000. Like he really only had like a weekend, like a week's worth of operations to fund their business.
Okay.
So he decided to go to Vegas, put that 10,000, put all their money
to make all the
on. I think it was a roulette. He put it on roulette or blackjack. Someone can fact check me. He put it on a gambling, and he won. And he got enough. It's
usually roulette when you do the life savings black, because you want a binary decision, right? Black or red. So it's usually roulette when they'll do that.
If I had to guess, I think
you don't do it
roulette.
on blackjack, because what if you get a double downtown? You like get to pull out another life savings amount.
But he literally went to Vegas. He gambled and he won enough money, and the company survived. FedEx became what it is today. So the moral of the story is sometimes desperate people do desperate things, and when those desperate things come out right, it was a great gamble. It was the smartest thing they ever made.
World, right?
So
and when it fails, I'm like, oh man, you should have known that was coming.
You wouldn't have FedEx today. You would only have USPS and UPS and DHL.
Well, I wish FedEx wasn't here today, because I think the son of FedEx is Arthur Smith, which was the head coach of the Falcons for last year, and Falcons is my team. And
did you lose money on that sports bet?
I didn't lose money, but screw Arthur Smith for leading the Falcons the way he did last year. So I have a bad resentment with FedEx.
All right, FedEx. Well, no more gambling for you. And with that concludes our episode 5.
Episode
5.
Gambling and stock.
Perfect.